Hello everyone, I'm Mike Connors, and welcome to How It Ticks, the go-to podcast for anyone with a spark of curiosity about the inner workings of Switzerland. Hosted by yours truly, an Australian expat with a deep curiosity, How It Ticks offers a platform where listeners are invited to explore the vast landscape of Swiss culture, business, innovation, and tradition. Each episode features a one-on-one interview with experts and thought leaders from various fields, providing a panoramic view of what makes Switzerland tick. If you are like me and you enjoy listening to successful people share their insights, this podcast is for you. In this episode, I sit down with Jörg Sandrock, CEO and co-founder of Neon, to explore the journey of building one of Switzerland's first truly customer-centric digital banks. Jörg shares his unique perspective on what it takes to grow a successful startup, drawing from his own experiences steering Neon from its early days to becoming a major disruptor in Swiss banking. We discuss how he transitioned from consulting into entrepreneurship, what inspired him to tackle the inefficiency of the Swiss banking sector to begin with, and how his role as CEO has evolved along the way. We delve into the challenges of scaling a Fintech company in a traditionally conservative market like Switzerland, including why the country has lagged behind in adopting digital banking solutions, and what has prevented others from challenging the status quo. This episode also covers how Neon is navigating the ever-growing importance of Gen AI, also how Neon balances the demand for more features with the need for product simplicity. Jörg gives us a sneak peek into what's next for Neon, from upcoming features to long-term goals, and offers insights into what makes a successful startup not just survive, but thrive. A quick note before we dive in, starting with this episode, I will be releasing conversations in two parts. This is in response to listener feedback requesting shorter, more easily digestible episodes, while still keeping the in-depth, long-form discussions. So this is part one of my conversation with Jörg. Enjoy. Jörg, welcome to How It Ticks.
Mike, thank you very much for inviting me. Looking forward to be part of your show.
I thought it would be an interesting question to start would be, what does the typical day in the life of the CEO of Neon look like at work?
I have maybe two different types of typical days. One day is maybe when I'm in Zurich, which is typically 3 days a week. I start rather early. I would say I'm maybe around 8 in the office. I try to of course, when I'm in Zurich, try to communicate with others in personal meetings. Nevertheless, also try to do some of the stuff by my own during the day. Have typically, I would say, 3 to 5 meetings maybe a day. And in Zurich, I work pretty long. When I'm not in Zurich, I live in Munich. I tend to start also earlier, but it's always video calls or more remote work. So that's the different types of how I schedule my week.
How much of your time goes towards internal team-focused work versus external investors, speeches, presentations, that kind of thing?
We haven't done any funding round in the last 2 years, I would say. So I manage the board, which is external investors and internal founders. We meet rather often, once a month, I would say. So it depends. Maybe 20% of my time over the last 12 months was more with external work. The rest is more like in product or team stuff. And so it's rather not that external, or the share of external work is maybe not that high.
Okay, so there's not going to dinners every second night with different investor groups.
Maybe I should have done that more often, but no, it's not, and also not. I don't follow too many events like conference. Some of them I like, but most of them I rather do not attend.
So I imagine you would get invited to many of them, though. I guess there aren't so many tech startups that are Zurich-based, and Neon, one of the standout ones. You guys must be invited to plenty of different events.
Maybe, but honestly, I think it's a rather small numbers. There are a few events I really enjoy. but we belong to the startup group. There are also a lot of banking events in Zurich, of course, but we are maybe not really part of the banking group, or so there are some tech events, but also maybe dominated already by rather even larger firms like Google. I think it was pretty visible in Zurich. So yeah, I think again 80% of, or maybe 75% of the work is more internal.
I guess that's probably what you want.
Yeah.
You were working in consulting for quite some time before you decided to join. What made you decide to leave and join start your own company?
I think it's very difficult to predict the future in terms of you make one decision, for instance, changing the job or selecting your university careers or whatsoever, and really predict the results for your personal life. Or so honestly, for work, when you do starting in a company or making a larger project as a consultant, you do a lot of planning. For my personal decision, it's I tend to, or maybe surprisingly, I'm a little bit less structured. I had a good feeling by thinking about, hey, let's try to start my own company. And if this is not that successful, there will be other doors. If it's successful, maybe it's fun. So that was a little bit the thinking, and it was not my plan when I graduated from school or university to say, well, I'm going now to 10 or 15 years into consulting, and then I start my own company. It was more a little bit opportunistic. We had a project in Zurich in, I would say 2015 around, for another bank, understanding the Swiss retail market quite intensively. One of the co-founders, Simon, he was also with me on the same project. He was very clear by saying he doesn't want to live or work as a consultant anymore, live as a consultant maybe. So that was maybe a little bit the trigger, and then we seized the opportunity and stepped into it. But it's honestly a pretty different way to work and to live, maybe even.
So it was the desire to change the style of work came before identifying the problem that you wanted to solve?
No other way around. It was I was happy with my consulting job. We did that project for a bank. A year later, and the bank decided not to implement it for various reasons, different reasons actually. And a year later, we thought, hey, that was a pretty good idea. They didn't go in that direction. Why shouldn't we try? It was really more opportunistic in terms of we saw the problem. We saw nobody really tackles it. There is some opportunity. So let's go for that and try it. I would not gone into, or it was not the idea first to say, hey, let's go and have a startup, and then let's see the market or the problem or whatever we want to tackle. It was really more or less right in front of us, and we decided to take the chance to and to start with the Neon. Yeah.
Do you, in your view, how well does consulting prepare someone to lead a startup?
I think it's a very good, let's say, school, or it's a good preparation for reasons like starting your own company is probably a very challenging exercise. A lot of different topics popping up, and consulting makes you, on one hand, it gives you the ability to manage complex tasks and then size it and slice it into subtasks, and then and finally to solve the problem. It helps you structuring these problems, solving them, looking into different industries or topics or challenges one after another. Also helps you maybe, or it gives you maybe a little bit the culture, how you want to set up the firm, while being aware that you're not in consulting anymore. When you work in consulting for a little bit longer time, you're used to people who join the project or who join the company, the consulting company directly from universities, or they're talented but maybe not that knowledgeable in that specific field. So that's another aspect. Also, maybe discussing with investors and making nice presentations and pitch books. That's something very helpful. On the investor side, sometimes it has maybe, or it had the reputation of a firm founded by consultants, is maybe also critical in terms of they are too generic. They know how to run a presentation, but not to implement whatever they want to do. But I think in our case, we proved that wrong.
What specifically was the problem that you wanted to solve?
It was the Swiss retail banking market, and that's maybe a surprise. But of course, when you look from outside, Switzerland is known for its banking industry. Clearly, it's I think still one of the largest, or at least the largest European offshore market, meaning private rich individuals have their accounts with the Swiss banks while they're not living in Switzerland or whatsoever. So Switzerland is dominated also by the banking industry with respect to their overall economy. So it's a very important industry, clearly. In contrast to that, when you look at retail banking, which is maybe the everyday banking, when you do your payments, when you do maybe your simple mortgage, maybe you're a little bit of investing, this country was maybe it's a hard word, but maybe a little bit underdeveloped in terms of digital aspects. If you
I think that's fair to say. I don't think that's a shock to anyone.
Maybe not. I don't know. But yeah, when you looked what happened after 2008, for instance, in the UK, banks really, or in Spain is a very prominent country, the banks really changed their operations, changed their digital offering, changed their organizations, like BBVA in 2010 or something. It was very, very well known in the industry. And new competitors came in, like Revolut in the UK, maybe Monzo, maybe N26, but also local banks like in Denmark or in Sweden or in Spain. So there was a lot going on. Based on that crisis, based on new competition, based on the ability to offer banking products in a more digital way, industry changed. But not in Switzerland, because the banks didn't really pick that up. And as long as there is no competition and no other offers, people were used to what they know, and we saw that as a big opportunity. We started, one simple example was when we started, no other bank, I think, was really pushing the so-called digital onboarding. So people were forced to go into a branch between probably 9 to 5, and of course not over the weekend, and they couldn't open their bank account. We launched a product in beginning of this year. It's the ability to have one account together with your partner. We call it joint account. And I think still we're the first bank in Switzerland that offers to open a bank account digitally for two persons. For all other banks, to my knowledge, you have to go to the branch, which is hard to believe, but it seems to be the case. So that was maybe now a little bit detailed question to the answer to your question. Yes, I think the bank industry was low on the digital side, very expensive for the client, also very costly in terms of their own production, own operations, and that's what we want to tackle.
And why had no one else tackled this problem before? I mean, if Neon started, what's 2015,
it's very obvious
16?
Because, very good, but also question, but also a very obvious answer, because it was just very profitable to run that in that operation. When everyone has a very high price and has also high cost, but still has a very positive margin, why should anyone in that club start to change? Every Swiss retail bank is profitable.
But in terms of if it's a very capitalist country, you'd think people are always on the lookout for opportunity. I guess, is it because it doesn't have a huge startup culture in the fintech scene?
Maybe, and maybe one note first. I accidentally said and falsely said we are a bank. We are not a bank. It's important to know, but maybe being a startup and start to challenge the other banks is bold. Maybe, I don't know. It's not that you start, hey, I have my very innovative AI solution nobody else has in that market, but it's rather really competing with the incumbents. It's more like it's really tough competition, maybe in terms of size, of course, but and maybe for startups it's easier to go into in a market that is growing or is maybe evolving or new. But banking is a very traditional market, of course, and there's no growth in the market and coming out of the market in terms of this year we have 7 million, next year we have 8 million clients in the Swiss market. That's not correct. So maybe that's why people didn't start earlier than we did. Nevertheless, there were some initiatives which are involved in different directions now, I would say, in the beginning.
Would it also be that the way Switzerland is set up in terms of regulation difficult to do so? I mean,
yes, of course. Yeah. When you start like N26, for instance, they started in Germany, but with the passporting within the European community, more or less, they could go into other markets, which is, of course, at least from the investor perspective, very attractive. Switzerland is, of course, not part of the European community. You cannot do the passporting, at least in theory. And it's a different currency, 3 or 4 languages you should support. So, and of course, the size is, when you just look from an investor's perspective, the pure size in terms of people living in Switzerland is comparable to the Greater London area. But those people in Switzerland are very wealthy. They enjoy banking. So we saw some also advantages by focusing on this rather smaller market. But we have some barriers from outside that people, or that other banks from Germany or UK could not do passport into Switzerland. So that was a limitation for competition, which we somehow benefit from. Nevertheless, with the recent news of FINMA, I'm not sure if this going to or if these barriers are going to be lowered over the next, let's say years.
Going back to when you first had the idea of Neon, how much of a product did you develop before taking this to investors?
We had nothing in the beginning as the product, just the idea, the market analysis. We needed to have partners. Our partner on the banking side, it's Hypothekarbank Regensburg, HBL, and based on their intention to set us up and based on our ideas, we started with a funding. Funding for us, or for me at least, was the most critical and risky thing for the reasons we just mentioned, because you need some VC money to start that, and giving the size of the market and the limitation to expand, that was the biggest challenge for us. And as a result, we ended up by a nice and strong investor base, but all of them are from Switzerland. So we never managed to get any significant European VC in our cap table.
mean, my understanding is your strategy is to stick within Switzerland, right? This is something that's, I guess, when you have different levers to pull in terms of the direction you go.
Yes.
Why?
Yeah.
I mean, when you've got competitors such like you said, Revolut, who have more of a global impact, why the
Yeah.
decision to stay within Switzerland?
I think at least could look at it from two perspectives. One perspective is I think it's we are successful in the market because we really focus on it. For instance, the banking product in Switzerland is still national. You have e-bill, you have certain payment formats, you have your Pillar 3A solutions. People outside Switzerland probably don't even know that this exists. So there is one thing on the product level that's really country specific. We support also the language. When you open the Neon app and your language is set to German, I think it's sometimes that you even have some Swiss German greetings in the app. So it's a little bit also from let's say language and culture. Our service is in the market, and also all the data stays in Switzerland, which is and it's protected by let's say the Swiss banks and so there is some aspect of why it's nice to be in the market. From the other perspective, I think in other markets, as I said in the beginning, competition is already advanced. So we would not have the same impact if we would start now in another country, in somewhere in Europe, because I think there is always already a better offer, and hence competition is a little bit more advanced, and it would be more difficult for us. So we will stay in Switzerland for sure.
In terms of competition, it seems like over the last, well, I've been living in Zurich now for 4 years, and it seems like since then, more every year, a new traditional bank is now releasing their own digital arm in competition, as opposed to Neon. How have you seen the landscape change over the last few years?
Oh, it was interesting from our perspective. When we started, we were in the very beginning, more or less to our knowledge, the first. Then there was another initiative from a incumbent bank, ZAC, which was, I think they had in the very first years more clients than we had. It was a different offer, digital only. They claimed to have an attractive pricing, which was actually not the case. And there was the appeal in I would say 2020. I think we managed to be successful in that space, and then CSX kicked in, which was maybe less successful. I would say they claimed to have, after a couple of months, 100,000 clients, but those clients were not new clients. They just migrated some of their existing base to that solution. And then the biggest change, I think, was U. U is a spin-off funded by PostFinance and Swissquote, and they started a little bit differently compared to our development. They focused in the beginning on trading, brokerage, a lot of cryptos, because of their strong connection to Swissquote. And based on that, they started to develop their offering and also provided banking services and simple service like Apple Pay, stuff like this. So right now, Neon and You are probably the two strongest Swiss challengers in the banking scene, while CSX and the others I mentioned are probably not relevant anymore in the retail banking.
I struggle a bit to understand the economics of a bigger bank releasing a digital arm and being competitive, because I guess it comes across as low to no fees for the end user, and to be profitable, I guess, with something I would imagine demands you to be an incredibly lean organization.
Yes, that perspective is correct. Nevertheless, banks also earn, at least in the current environment, just with the deposits of the clients. So you have two aspects in the banking industry, and is the product, how do you generate revenue, how lean are your operations. We have currently 58 FTEs, which is already quite big for us, but compared to our 230,000 clients, it's still, I think, a very competitive ratio. But as a bank, as I mentioned, that is one, let's say, dimension. How lean are you? How much is your profit contribution into your P&L? The other aspect is how much could you generate with the deposits of your clients? Of course, people or banks pay a low interest back to their clients, but they have also here a positive margin. So that is something that is, or that was or is more important since the banks or the SNBs and the other central banks started to change their interest rates. I think end of 2022. Banks also, due to the inflation, or the central banks increased the interest rate. Hence, banks profit now from the deposit. That's a very important factor when you look on profitability on banks.
Does this make it difficult then if one of the main ways to generate revenue is to manage money, and ultimately your customers are individuals?
Yeah.
Would you say that your customers are the people relative to the big banks, the people without millions and millions of money to manage?
Our customer base is average age 39, 60% male, 40% female. In all regions of Switzerland. Current deposits of Neon or of our clients are 1.2 billion. 1.2 billion is, of course, a very huge number. If you compare it with a Swiss bank of that size, there is still some potential that people transfer more money to their Neon account. It's also because we are on the market now for 5 years, so average client age is less than 2 years in terms of client age, in terms of how long has they been with the Neon. So there is a lot of potential. Of course, we do not target the very rich people. It's really just more or less average people, average population we have as our client space.
I read that although digital banking is becoming more mainstream, those aged 18 to 29 still prefer to consider opening an account with their traditional bank, which really surprised me. Why do you think that is?
Honestly, yes, these news popped up that there is now the movement of in the, from my perspective, younger generation to, or there's a share that is a little bit focusing more on the non-digital world right now. I like the idea because, of course, digital consumption is sometimes even for the younger generation maybe too dominant, and so it's good to see that movement. But in figures, the age of 25 to 34 is the largest group in our client segment. They're the most active clients. So I think it's both. There might be a percentage of people who want to have now offline banking and traditional banking, and then going into a branch and sign a contract based on paper, while still the majority is more seeking for digital solutions. It was never the aspiration or our assumption that 100% of the population would open a digital account.
Did you see any changes or impact due to the collapse of Credit Suisse in the industry?
There were 2-3 larger, let's say, events in the last years. One was Corona, Credit Suisse, and maybe now the change from negative to positive interest rate. On the CSX side, we saw only a very short-term impact because it was very prominent in the media and also social media. So people started to complain why CSX is not going to stay. So and some in the social media buzz started, hey, I moved my account to Neon because it's a nice bank, but it was of course for us a big surprise, and we didn't react immediately in our marketing, or only did a very small campaign. So on that side, we didn't see too much impact. Corona was not a big impact neither. The share of online and e-commerce payment was already very high in our client base, and on the negative interest rate to positive interest rate, it was a big impact in terms of after we agreed with our partner bank to have a positive interest rate, you saw a massive income or inflow of new deposits.
That's it for part 1. Part 2 will be out soon, so keep an eye out for that. If you follow or subscribe to the show on your preferred player, you will be notified when that episode is out. Plus, it really helps me grow the show. And also, don't forget to check out the new website, howitticks.ch, where you will find episode details, links, transcripts, and a place to share your feedback. I would love to hear from you. See you in part 2.